Welcome. Welcome. This is the Waves of Profit daily review for March 26, 2015. We have a philosophy that you should be able to make 10% on your investment in 10 minutes, and we endeavor to show you just about every day that the market does indeed give you that. There are certain days when it doesn't, and there are days that you should not trade. I don't believe today is one of them, so I'm quite excited. My name is Scott, and joining us, as usual, is Alan Maxwell to go over today's trades.
Hi, Scott. Well, it was actually a pretty active day, and yesterday was an active day. And sometimes when the market is active down, the next day it reverses up. And today had a bunch of that. So I'm just going to show you the trades that we had, and I'm going to show you why they were interesting. And I got my little magic pen with me here, so I can scribble on the screen. This bottom third is the multi-day 60-minute candles. So you got about 7 days plus today. This stock here gapped down, and so it was a great trade for a few minutes. So we're going to go look at that and what happened. So right here, it was a great trade. Everything was good. So I already hit the buy now on the put. I'm going to go forward 1 minute. And the answer is 9%. We're happy. And then 31%. And we say, well, that hit our target. Now, you may have ended up getting out here somewhere automatically on your limit sale. If you didn't because you're slow, you just say, great, thanks. And we're going to do a review of this stock later in the day and how it turned out, and just talk about the value of puts, because we've had a few people ask us, well, the stock only moved 3%. How can you make 10 or 20 or whatever percent? And I'm going to show you that the option moves very powerfully, even though the stock may just sort of dabble along like normal. So the other stock we're going to look at that also gapped down, and the gap is this here, where the starting price was below yesterday's low. Yesterday's low is here, and the stock opened up here. It's not much of a difference, but it is a difference, and you can see that things are going that way, and the market was also going that way. So here's what we're going to do. We're going to move forward 1 minute. And I already hit the buy put. So that was 1 minute, and that's the beauty of breaking. Because we had another person ask, what does it mean? Nothing to the left. In the course, we teach you about support and resistance and all kinds of good stuff. Certainly, in that second course we're putting out, there's a long conversation about support, resistance, and Y points and all that. So you just get all the goodies there. But there's no objection to this stock just hauling it on the downside, and that's exactly what it did. So we're going to say, yeah, that's much more than my 10%. I'm just going to take that. And the next trade was for Goog. And here this fits the rules. Those that know the rules go, yeah, I can see why that fit your rules. So I already hit the buy on the put side. I'm going to go forward 1 minute, 2, 3, and there's my 12%. So I'm going to say, stop it. So we're going to review the trades we did. So in 2 minutes, 30%, in 1 minute, 42%, and in 3 minutes, 12%, which is more like our usual. So for the skeptics, because a healthy skepticism is a good thing, we're going to put that there. But what we're going to do is I'm going to bring up the actual option prices from trading today. So I'm going to use my little highlighter pen here for a moment. And you have to ignore this skull and crossbones. That's there as a helper. This is in the live tool. It means that the spread is too high. Well, this is for the end of the day. Or in this one here saying that the open interest is low, but really the volume is great here, and those are the things we care about. So what I'm going to do is I'm just going to cancel that, and what we're going to do is we're going to go look at Goog for the end of the day. So here we are, and just see how the day turned out. I'm going to turn off some of the colors and all that stuff just so you can see the pricing a little bit better. And okay, so there's the stuff. So what we were looking at, and just so you can see it a little easier here, is we got in for Goog here, and we got out there. Okay, and so the price went lower, it went higher, and it went all over the place. This is why we get out. And what I want to do now is I want to go look at, again, the, where is that? I've got the day trader live, and I've also got the other one open here. Let me just, it's a little bit confusing, but I got both open. I normally don't do that. So here's the price of the put for Goog. And so the opening price that was there was $7.30. So when the day began, this put, which has a strike price of $562.50, so we'll just bring out the pen here again. So that would be, this is the strike price right here. So the opening price on this, that's this price here, was $7.30. It hit a high of $11.90, which would have been down here somewhere. And the low would have been up here somewhere. And so the point of the conversation is, well, the option may move a bunch of money, and you may have to put up $500 per share, which means you're putting up $56,000, and it moves a couple bucks, and so you're only getting a 1% range change, 1%. Here, we're seeing a range change of about 50% between the low, which was $6 roughly, and a high, which is $12. So that means if you would have wrote it from here to here, you would have doubled your money, which is 100% gain. So from here to here is easily 10% or more. And in our case, it was more. And that's, does that explain it, Scott?
Yeah, I think that's a really good way of doing it, because you have to understand this is a highly leveraged derivative based on the stock. So how many options you buy, calls, puts you buy or sell, does not impact I was going to say, doesn't impact the price of the stock.
No,
and
it doesn't.
You can have a small move in dollar amounts for the stock, but it can end up causing quite a huge difference in the price of the put or the call.
Mm-hmm.
In this case, 12%.
Yeah, so 12% is from here to there. That's 12% of the option price it gained.
Which is really only like $1.20 or $1.50 in the stock price changing, which is 1.1%.
Yeah, it's just really nothing in the stock movement, but it's a big deal for options, and that's why we like options, as Steve puts it. You know, the incredible power of options. It's like, yeah, it's really good. So we're going to look at the other one too, and then we'll call it a day, so people aren't here for too long. There's this one. Remember, this was a 30% jump, and where we liked it was right there, and we got out there. And so it's like, well, can you really make 30% in such a short little time period? And the answer is, I'll close that guy and that, because that's Goog. I showed you two options. One was in the money at the time and one was not. So here we go. So the low price, well, the opening price was $1. So it was worth $1 here. And the high was $1.50. That would have been down there. And the low would have been somewhere around here. And when it closed for the day, you know, you can see it's between 35 and 50 cents is what people are looking to pay for it, and that's this time frame here. So here it's worth, let's say, 40 cents. Down here it's worth $1.50, and there it was worth $1 on the first trade. So the first trade could have happened in here somewhere. So we're only looking for a jump from here to here. Now, yeah, the first trade probably was down here somewhere. First trade of the day, meaning the opening price was $1. We're only looking for this gain here, and so for us, we say, well, we would have made about 30%. That's based on averages. So from $1 to $1.50, you had your 30% jump in there, just only because the first trade was probably in here and not at the very first second of the day. This is not as highly traded a stock as like Goog and some of the other ones. Anyways, but you can see the numbers from $1 to $1.50. That's a 50% gain. You caught some of that move in here.
Right, and we keep talking about not being greedy and going for the 10% in 10 minutes because you know, it wasn't very long after that that it totally reversed and it went in another direction. So when you try to squeeze out every penny, oftentimes you end up losing the dollar.
Yeah, so the replay is mathematically averaged out, and it's actually a little bit on the conservative side. It's really good for getting your skills and knowing what's going on, but it's not accurate to the penny like a live trading program is.
Right.
But you don't need that. That's what the live trading is for, is to make the money. So people would say, well, you know, here, you know, $1.50 versus $1, and you're making basically, let's say, 30 cents. Well, 30 cents, because this is on contracts, this represents 100 shares. So that contract, if you sold it at the high, you would have sold it for $150. And some people would not be excited about making basically $30. Well, you're not buying one contract. You're buying as many as your account can handle with your risk management. So you may be buying 10 of those. So in which case, and you made $300. And it cost you basically $1,000. That's what you would have put up roughly, $1,000 to make $300.
And if you had a larger account and you put $10,000 into the trade, you would have made $350.
Well, if you would have put up $10,000, then you would have made $3,000.
What? In a day?
Yeah, well, in actually a couple minutes.
Wow.
And we're going to do some more of these.
I wonder we're excited about this.
Yeah, well, there's a great reason. We're going to show people more things like this, where we're showing you the actual option prices from today, because then it's more realistic. It's for them. It's like they get it, because a lot of people don't have experience with that. Some of the viewers do have experience with that, and they go, "Oh yeah, that's how it is." But for those that don't know, it's like, what? So we're going to connect you, you know, every few days with the actual price on how some of the things went, so you can get a great relationship with reality and what we're talking about.
Right, and I wanted to say too that when you're looking at that slightly pink background box there that has SWKS blah 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 in it, where we point to the prices, that is a relatively new addition to the Waves of Profit software. In, like, we're talking, I don't know if it's days or weeks, but it's certainly not months. And one of the things that we get from time to time is, well, why can't I just buy the program? Well, because if you'd have bought the program 6 months ago, you wouldn't have this feature, and this is really, really important, I think.
Yep.
And so we're constantly looking at how can we improve. The other thing, too, is Alan, surprisingly enough, gets better and better at math. And last week he figured out that 1 + 1 = 3, and then he takes that knowledge and he uses it in the calculations that occur to create these indicators that we have. So the program, seriously, I mean, if you know somebody like me who saw it 10 years ago and you see it today, you can say unequivocally it has changed and grown and improved as Alan has changed and grown and improved, and as the market has given us new pieces of information and things to look at. And we look at Forex markets and how things work in the Forex market, and we wonder, well, how would that impact how things work in options? And if it tests out that it does, then we add that so that we can get a little more certainty, a couple more percentage on our side. Obviously, there's nothing that's 100%, and we add those things in. So I really want you to understand that the reason that we have a monthly price and an annual price is the fact that we take a fair bit of that and put it back into more research, into quicker feeds for the information, to streamlining the program, to making new calculations and new indicators and testing all those sort of things out so that you have the best chance of using the program to be successful. And I think that's really, really important.
Yeah, and just so everybody can see this part too, because this is just one option code. This is a tool that I find very helpful, and actually it has helped people make a bit more money, which is really the goal of all this, is this shows you in the money, out of the money, the call and the put, and that little guy there is telling you that there's something not quite right, so you don't have to study stuff. It's actively getting it, and there's no little skull and bone guy here, because this one has a good spread, it's got good volume, it's got good open interest. That's a better option probably to trade than this one.
There's nothing worse than being right and losing money.
And I've done that.
And that's what happens when you pick the wrong option.
Yeah.
So and the program will tell you, skull and crossbones, don't buy this one.
Yeah. Go get something else.
Go get something else. Great. Thank you very much for sharing all that, Alan. It's been very enlightening. And once again, we have shown you that when you're in the game, sometimes even trying to only make 10% in 10 minutes, you get the home run and you hit that 30% or 40% mark, which is pretty exciting. So thanks for joining us, everybody. If you want to know more, we've got a course. You'll be able to find out information about it at www.wavesofprofit.com. And we'll see you next time. Make sure, by the way, the bottom right-hand corner, we've got a little subscribe button. Hit that so you don't miss any of these videos that we're doing almost on a daily basis, telling you about what's happening in the market and how you can get off the 40-hour work week and forget about the 4-hour work week and look at a 40-minute work week. See you next time. Bye-bye.